Okay, good afternoon children. Yesterday we discussed about not-for-profit organizations, the meaning, examples, features, then their financial statements. Just let's have a recap of that. Those organizations which are created to provide services to the public or to the society are known as not-for-profit organizations. For example, hospitals, schools, colleges, universities, literary societies, religious institutions, charitable institutions, etc. etc. These organizations prepare their financial statements. These are receipts and payments account, income and expenditure account, and balance sheet. So we have seen about receipts and payments account. We have seen about income and expenditure account, their items, their format, their nature, everything we discussed yesterday. Receipts and payments account is what? It is the summary of cash book. It is a real account and it is prepared as per the cash basis of accounting. It carries opening as well as closing balance. Opening balance is opening cash in hand and closing balance is closing cash in hand. Or cash at bank, you can say. Income and expenditure account is a nominal account which is prepared on the basis of the accrual basis of accounting. It does not have any opening balance. It will have a closing balance. That closing balance will either be known as surplus or deficit. That means it is a type of profit and loss account only, but since these organizations are not for making profit, so it is not known as profit and loss account, else it is called as income and expenditure account. Now let's discuss about the balance sheet of these organizations. Like a business organization, these organizations also prepare their balance sheet to know about the financial position. It is prepared in the same pattern as it is prepared for the business organization. That is, first we write down the heading as balance sheet, then the date on which it is prepared, as on, it is an as on statement. Right, left hand side liabilities, right hand side assets. Liabilities, first item, capital fund. As it was there, capital in balance sheet of profit organizations, here it will be capital fund. Capital fund, first we take the opening balance of capital fund, we add the surplus or subtract the deficit which was shown by the income and expenditure account. Then the final amount of capital fund will be taken to the amount column. This capital fund is also known as general fund or accumulated fund. Then these organizations, since they are depending upon the funds from different sources, no one is there to contribute here the amount, so the capital is not known as capital, we call that as a fund. Likewise, to meet various requirements of this organization, they create various funds. Like a building fund. If a sports club is there, then that can create a sports fund, that can create a tournament fund, a match fund, prizes are to be awarded, then prize fund. So likewise, these funds are created. They are our liabilities. They are taken to the liability side. Why to the liability side? Because the amount received against them is a responsibility for us. Is a responsibility for us. We have accountability against the amount. So the amount received and uses of that amount will be shown in the balance sheet. So building fund, opening balance, previous year's balance sheet we will take here. Then any amount of donation received this year against this building fund will be added. Then any income, this amount of building fund can be invested in outside securities so that it can be kept safe. That means it cannot be used for some other purposes. So income from those building fund investments, if we are receiving during the year, we will add here. The amount will be final building fund amount. Likewise, sports fund will be taken, or you can say match fund, tournament fund, any other fund. This building fund is an asset fund. Sports fund, it is for an activity, or we can say that it is to manage the expenses, specific expenses of the organization. So sports fund, opening balance, we will add the amount of donations received against the sports fund, income from the investment of such type of sports funds, investment, and we subtract the sports expenses. The amount of this sports fund can be invested into the outside securities, then we will receive income in the form of investment, interest. That interest will be added here. It may be accrued also. Accrued interest is also added here. Then sports expenses we will subtract here. The final amount will go to amount column. Suppose the amount here is negative. The amount here is negative. The sports expenses are more than the amount of opening balance and donations received this year and the income. Then the difference amount between the three items, that means the total of these three and sports expenses, we will take to the income and expenditure account. Life membership fee. Life membership fee, those members who have chosen to become life members, they pay the amount of their subscription altogether for their whole life. That amount is our liability. So this is generally added to the general fund, but we have taken here as a separate item. If you add it to the general fund, then also it is correct. So it is a part of our capital fund. Capital fund actually is created through such type of donations only. Then legacies. This is also a donation. I told you yesterday also about it. That legacies are the donations received from the will of a deceased person. A person who has died and he has in his will written that the amount of the properties in his name should go to a particular NPO. Then that is legacy, will be taken to the liability side. It is a capital receipt. So being a capital receipt, we take it as a liability. So it will be taken to the liability side. Then endowment fund. I told about it also. Endowment fund is what? It is also a gift. An amount which is given. An amount which is given by any donor to meet a specific expense which is specified by him. Then outstanding expenses, we are knowing that expenses which have not been paid during the year are our outstanding expenses. We will take them to the liability side. Then advance incomes. Advance income, if any income has been received like subscription, we saw an item yesterday. If subscription is received in advance, then that is our liability for time being. So this is our liability side. On the asset side, fixed assets are shown. Fixed assets, building, furniture, sports equipment, some machineries may also be there. So these items are taken as fixed assets. How to calculate the amount? For the space reason, I have written it in notes. How to calculate the value of fixed assets to be shown in the balance sheet? We take the opening balance. We take the opening balance, that means the previous year's balance sheet balance of a particular fixed asset. We add into it any purchases made during the year, that means any additions made. We subtract if any part of this asset is sold. So book value of that asset we subtract and depreciation is subtracted. Then the final amount is taken to the asset side. Likewise for furniture, likewise for sports equipment or any other fixed asset. What we will do? The previous year's balance plus any addition made during this year minus a part of this asset sold, book value of that is subtracted, and the depreciation amount of current year is subtracted. Then this way we come to the amount of fixed assets. There will be a separate question of 1 mark in MCQs or just to calculate the amount of fixed asset to be taken to the balance sheet. Then the current assets. We are knowing about the bifurcation of current assets from last year only. Cash in hand, cash in bank, outstanding subscription. If any amount of subscription from the members remains unpaid by a member, then that becomes our outstanding subscription. Or you can say accrued subscription. That amount we show here as an asset. Accrued interest from any investment will be taken here. Prepaid expenses, any expense which has been paid in advance, it is an adjustment of against expenses, so this also is shown as a current asset. Then investments. Investments, as I was telling you here, this building fund amount can be invested in outside securities, that becomes our building fund investment. Sports funds, tournament funds, these amounts can also be invested in outside securities to secure this amount and to fetch some income against them. So these investments are shown here. Likewise, in the banks, from our bank balances, if we are making some fixed deposits, that is also taken as investment. So this is the balance sheet of a not-for-profit organization. Some specific items are there. Just we have not seen this building fund, sports fund, life membership fee, legacies, endowment fund. All these items are new for us. So this is the format of balance sheet. Now let's come back to the capital fund opening balance amount. Sometimes in the question we are not provided with the amount of opening balance of this capital fund. So we have to calculate it. To calculate it, what we will do, as you remember, what we did in the chapter incomplete records, accounts from incomplete records, we had to take two statement of affairs. Likewise, here we will prepare opening balance sheet, not the statement of affairs. We will prepare the opening balance sheet to calculate it. Opening balance sheet is the last year's items balance sheet. Last year's items will be given. From those items, we will prepare opening balance sheet, and the balancing figure on the liability side will show us the amount of capital fund in the beginning. So that capital fund we take here. Okay. So one more item regarding this balance sheet I will tell you about is some special receipts are also given in the question. Like donation for building, but we don't have any building fund. Donation for building, we don't have any building fund. So that becomes our specific donation. We will take to the liability side. Like any special organization is being done, that means something is to be organized, and against that subscriptions are collected, like subscription for a party, annual dinner is to be organized by the NPO. For that subscriptions are received. That amount is also taken to the balance sheet liability side until it is used. As soon as it is used, it will be consumed. But if any amount is left over there, that will be carried forward for the next year through this balance sheet liability side. Okay. So this is our balance sheet concept. After that, we will see various funds. Now I am taking our next topic of today's class, that is fund-based accounting. Fund-based accounting. This is an important part, and we had one question carrying 3 marks this year on 5th of March 2020 in this year's board examination. There was a question on tournament fund carrying 3 marks. So fund-based accounting, what is it? First, let me make it clear to you people. Fund-based accounting is followed by not-for-profit organizations. What happens? These organizations, as I told, they are created or they are established for some specific purposes. They have some cause. To meet those causes or to meet the requirements of those causes, this organization will require funds, and that is created or generated through various donations. When donations are raised, amount is raised through donations, then we have to show it separately because of the accountability, because the accounting has to be shown. So these organizations follow fund-based accounting. These funds may be of two types: unrestricted funds and restricted funds. Commonly, the unrestricted funds are known as general fund, or the amount of capital fund what we have seen here. Capital fund, so these funds are of two types. Number one, capital fund or general fund that we have seen. This is also known as accumulated fund, also known as accumulated fund. This is shown on the liability side of the balance sheet. The donor or the management of the NPO has not put any restriction on the use of this amount. That's why it is called as unrestricted fund. Any amount invested from this amount and any income against that, if received by the organization, that will be taken as a regular income, and that will be shown on the income and expenditure account credit side as an income. Then we have another part, that is specific fund. As we have seen in the balance sheet also, we have number one, sports fund, building fund, pavilion fund, tournament fund, match fund, prize fund, environment fund, these are all specific funds. These specific funds can be of various types. These specific funds may be number one, assets for, funds for assets. These may be funds for assets such as building fund, library fund, pavilion fund, etc. How it is treated in the books of accounts? How do we take it? This specific fund is taken into the balance sheet liability side. We show it as building fund. This way, building fund. In the balance sheet also I have shown it. We take the opening balance, BVSCS balance. Then we add the donations received during the year for this building fund, and we plus any income from this building fund investment. Now we have total amount of fund. This total amount of fund now will be utilized to make building, to construct building. Here one thing is to be kept in your mind. The amount of building which has been verified, which has been certified, the work of building which has been certified will be transferred to the capital fund. Transferred to capital fund. And the remaining amount will be our building fund amount to be taken to the balance sheet. Listen me once again. How to show this building fund? Building fund is what? Our specific fund against assets. The opening balance. You will add the donations received during the year. If any amount of building fund is invested outside and income is received on that building fund investment, we will add it there. Total of these three minus the amount spent for construction of building during this year will be transferred to capital fund. That means we are capitalizing that, and the remaining amount will be taken to the balance sheet. That means this is the amount remaining in the building fund. Then capital fund. Capital fund we are showing. In capital fund this amount will be added. Capital fund this amount will be added. If any amount against this building fund is invested in outside securities, that will be taken to the asset side, named as building fund investment. So this is against assets. Then for expenses, suppose some expenses are to be met by this organization. So मैंने नाम बताया था आपको, like sports fund, match fund, tournament fund. So second is fund for expenses. Expenses funds like sports fund, match fund, tournament fund, etc. Then environment fund, prize fund, etc. These funds are created. Now how to show that? First thing, calculate कैसे करेंगे? So calculation of amount of fund. Opening balance, the previous year's balance of this amount, this fund. We add donations received during the current year. This year, whatever amount we have received. Then we add income from this specific fund investment. received plus accrued. Both types of interest. If any amount is receivable, not received yet, both the amounts will be plus here. Then we subtract the expenses, specific fund activity expenses. You have to pay attention to it. Suppose sports fund is given, and in the question, along with the sports expenses, you are given prizes were awarded. So those prizes will not be met. The expenses against those prizes awarded will not be met from this sports fund because that is a separate expense. So only related expenses will be subtracted. This final amount will be shown to the balance sheet liability side. So here there was a question also, if this amount is negative, then the negative amount will be taken to the income and expense account expenditure side. If it comes positive, we take to the balance sheet liability side. If this amount is negative, this final amount is negative, we will take to the income and expense account expenditure side. This year, the question was there. Let me read that question for that. Let us do that. This was question number 14 on tournament fund. I am showing you here. How will the following information of Royal Sports Club be presented in the income and expenditure account for the year ended 31st March 2019 and its balance sheet as on that date? Tournament fund on 1st April 2018, that means the previous year's balance, it was 5 lakh rupees. Tournament fund opening balance is given 5 lakh rupees. Then tournament expenses incurred during the year. The expenses against this tournament fund is given 8 lakh rupees. Tournament fund expenses incurred during the year 8 lakh rupees. Donations for tournament fund received during the year 1,20,000 rupees. 120,000 rupees was received as donation against that. And sale of tournament tickets during the year 1,50,000 rupees. So the question says, how will the following information of this sports club be presented in the income and expenditure account for the year ended 31st March 2019 and its balance sheet as on that date? So I just told you about how to calculate the amount. Now I am telling you how to present it. If the amount of this specific fund is positive, that means the amount of opening balance plus the donations received plus any income either in the form of interest from the investments of this specific fund investment or any other income raised through the activity of this fund will be added to the fund amount minus the expenses related to that fund activity. Then whatever amount comes, if that is positive, we take to the balance sheet liability side. If that amount is negative, then we take it to the income and expenditure account liability side. Here the question says that we have to prepare both income and expenditure account and balance sheet. Both sides we have to show it. Main item, this is the main item of balance sheet. So how to solve this question? Only extracts we are going to show. So we will prepare extracts of both income and expenditure account as well as the balance sheet. As on 31st March 2019. This is debit side, this is credit side. Here expenditure, the amount, here income and the amount. Then it is to be shown on the balance sheet also. So balance sheet extracts also we will show. Just by seeing the amounts, it is easily revealed that the tournament expenses are more than the incomes or the donations and the previous year's balance. Now look, first of all, we will give the name tournament fund. Here, opening balance. First, we will write down the opening balance. How much is that? 5 lakh. Plus donations. The amount of donations received is 120,000 rupees. So 1,20,000. Then sale of tournament tickets. So sale of tickets of the tournament, we fetched 150,000 rupees. Total amount we could collect during the year is 7,70,000. But the expenses are 8 lakh rupees. So how we will do it? 7,70,000 of the expense amount we can recover from the fund amount. So we subtract here minus tournament expense. 7,70,000. So the amount which will go to the balance sheet is nil. But we will have to show it. We will have to show it because the question demands so. And then here we will write down 2 tournament expenses. In the income and expenditure account, we will write down 2 tournament expenses. Total tournament expenses are how much? 8 lakh rupees. How much we could cover up from the tournament fund? That is 770,000. How much is left? 30,000. This 30,000 we will show here. This way we have to present it. Suppose any investment is there against this tournament fund. So how we will show? We will write here tournament fund investment. But it is not given in the question. So this was a question in this year's question paper carrying 3 marks. This was a question this year carrying 3 marks. Okay. So it was to be shown this way. Right. So it was a specific fund against assets as well as liabilities. Fund activities. Then some more funds are there. They are number 1, endowment fund. Endowment fund. Third number. What are endowment fund? It was discussed when we were making balance sheet as well as yesterday when we made the receipts and payments account. I tell you once again. It is an amount of gift or bequest from a person. It is simply a donation received from a person in the form of a gift or a bequest, stating the purpose behind giving this gift. The person who gives it will specify that this amount should be invested and the income of this amount should be used for the specific purpose which is specified by the donor himself. The amount is to be given by a donor and the donor will be specifying the use of its income. The amount donated will remain intact. That will not change. That will always remain the same. That is not going to be used. Anytime the donor here can take the amount back. He can withdraw. Now I do not want to continue with this fund amount. Please give me the amount back. Or it may be reverse also. In some cases, the organization itself can give it back to the donor. That we cannot continue with your endowment fund amount now. So please take it back. So this endowment fund amount will remain intact. It will be shown on the liability side of the balance sheet. Am I clear? Endowment fund is a very specific fund. It is received as a donation or a gift or a bequest. The donor of this fund amount will be specifying the use of this amount. The donor of this fund amount will be specifying the use of this amount. but the amount will remain intact. He will put the condition that it has to be invested in some securities or somewhere in the bank, and whatever income is received yearly, that income amount only is to be used for a specific purpose. As I gave you an example yesterday, let's suppose our student, this Mandi Aditya, he wants to give some amount to the organization, to his school, that after he passes his class 12, the commerce topper of the class 12, or that one who gets highest score in accountancy, should be awarded with the amount received as income against the fund amount I am giving. So that is endowment fund. Anytime this Mandi Aditya can take his amount back. Okay, this is called as endowment fund. Right. The next is our annuity fund. This is also a very important fund. They may be asked 1 mark theory questions. They may be asking 1 mark theory questions. Endowment fund okay? Then annuity fund. Annuity fund is also a specific fund. This is the amount. There will be 2 persons involved here in this. There will be 2 persons involved here. First, the donor, and second, the beneficiary. Try to understand. This is very important. There will be 2 persons involved in it: donor and the beneficiary. Donor will donate the amount and will give the name of a beneficiary. He will say here that this amount I am donating to the organization with a condition that after my death, this donor says, after my death, my beneficiary who has been named by him should get an amount monthly, quarterly or yearly from the organization. When? After his death. Say there is a person X, donor a person X, and donor's wife Y. Donor X gives 10 lakh rupees to an NPO. 10 lakh rupees to an NPO, this donor gives, says that after my death, after the death of X, his wife Y should get per month 12,000 rupees. Per month 12,000 rupees until her death. As long as she is alive, she will be getting 12,000 rupees per month from this organization, from this not-for-profit organization, against this amount donated by X. After the death of the beneficiary, that is this Y, ex-wife Y, if she also dies, after the death of this Y, this 10 lakh rupees will become now the property of the NPO. This is annuity fund. So here, what is number 1? An amount is there that is given by the donor. Then the donor names a beneficiary and he specifies the name of the beneficiary as well as the amount to be paid to the beneficiary and the time period also, for how long this amount should be paid to the beneficiary. So this is a very important fund. Please, you have to learn it properly. Then next is loan fund. L-O-A-N, loan fund. Loan fund is also created by these NPOs. Like some colleges are there or some schools are there. They are creating this loan fund. Through this loan fund, they give benefits to those meritorious students who are going to pursue their higher studies from abroad or from some specific institutions. They give them loan. That loan may be interest free or at a very nominal rate. They give them this loan. So this loan fund is used for that purpose. The loan fund is created by the organizations in order to give loan. In order to give loan to some of its members, some of its other beneficiaries. So this is about loan fund. Okay, so these are there 2 types of funds. Number 1, unrestricted fund, which is known as general fund. Then restricted funds, these restricted funds are of various types. Number one, specific funds. I told you two types of specific funds. Number one, building fund, that is for assets. Then sports fund, that is against some activity. So sports is an expense, is an activity against which every year some expenses are written. But building is an asset which will be created. So asset funds, against these assets funds, an asset will be created. Against these expenses funds, nothing will be created, but an activity will be organized and the expenses of that will be met. Then was the endowment fund, then annuity fund and the loan fund. So these are 5 types of funds again in the specific funds, and one more was the general fund. So let me give you a question. We will do one question of this specific fund and then of the asset fund. Now how we will show it? We will prepare the extracts of the balance sheet. Don't forget to write extracts. The word extracts has to be written. It is to be prepared on 31st March 2020. Liabilities, assets. Here we write prize fund. Opening balance, that was 1 lakh rupees. We will add here the amount of donations received. It was 15,000. And we add interest on prize fund investment 10,000. Total amount is 125,000 minus prizes awarded. 85,000 rupees. The difference of 40,000 will be taken to the balance sheet amount. So this is the amount of prize fund for the year 31st ending on 31st of March 2020. Okay, this way we will show it. Okay. So this way you will get a question from this fund based accounting. Okay. Now I will be giving you one more question relating to this fund only, and then I will be taking your doubts. An organization is there which is having match fund. So how will you show, please note down, how will you show the following information of a sports club in its final accounts for the year ended on 31st March 2020. It has match fund as on 1st April 2019. The amount is say 5 lakh rupees. 10% match fund investment. 10% match fund investment 5 lakh rupees. Donations received for match fund during 2019-20, say 1 lakh rupees. Sale of match tickets. Sale of match tickets during this year amounted to 25,000 rupees. Then interest received on match fund investment. That is 35,000 rupees. Then match expenses. Match expenses amounted to 6,50,000 rupees. This is our question. How we will show this information relating to match fund? I am repeating for you. Match fund as on 1st of April 2019 was 5 lakh rupees. 10% match fund investment amounted to 5 lakh rupees as on this same day, as on 1st of April 2019. Donations received for match fund during 2019-20. During this year, the donations received for this match fund amounted to 100,000 rupees. Sale of match tickets. Some matches were organized and match tickets of these matches were sold. We fetched up 25,000 rupees. Interest received on match fund investment. This match fund investment is there with us. On this, interest received during this year was 35,000 rupees. And during the year, match expenses amounted to 6,50,000 rupees. So first, we have to see where these informations are to be placed, to the balance sheet or to the income and expenditure account. The question like this year, it was asked in the board examination. If it says that you have to show it in the income and expenditure and balance sheet both, then you have to be very careful about that it is going to show a negative balance. In that case only the match fund amount will go to the income and expenditure account. And if it is showing only a positive balance, it will not go to the income and expenditure account. So if it goes negative, then just with the previous question I explained you from the board examination question, that way we will show. So let us check. Here we have 5 lakh rupees opening balance, 1 lakh we have received as donation, 25,000 we have received as match tickets, and 35,000 total interest we have received here this year. So 516, 625, 625 and 6,60,000 this amount is there, and it is 650. It means match fund amount is more than match expenses. So we will show it to the balance sheet only. One more thing here in this question, when this percentage is given for the match fund investment or any investment, 10% match fund investment is given. That means the organization must receive 10% of this investment amount as interest during this year. But it is received here 35,000 rupees here. Amount 5 lakh at 10% should be 50,000. Received is 35,000. Here it is received. It's not interest on match fund investment. It is received amount. That means 15,000 is accrued interest. 15,000 is accrued interest. 5 lakh, 10% of 5 lakh, 50,000, 35,000 received. Balance amount 15,000 is what? That is our accrued interest. Okay? So that 15,000 will also take. So how to solve it? How to show it? We will show it in the balance sheet. Again, the extracts we will be showing. As on 31st March 2020, liabilities and their amounts, assets and their amount. Then on the liability side, we show it as match fund. Name is match fund. Its opening balance 5 lakh rupees plus donations received 1 lakh plus sale of match tickets that was 25,000. Then plus interest received from match fund investment 35,000 rupees and 15,000 is accrued interest. 15,000 is accrued interest. How did we calculate? 5 lakh rupees is our match fund investment. Name given 10%, that means 10% is the rate of interest on those investments. We should receive 10% this year, 50,000, but we received only 35,000. So the balance 15 minus 35 is our accrued interest. Total 5 plus 6, 660, 675,000 rupees. 6,75,000 rupees is the total amount of match fund this year minus match expenses. 6,50,000. So 25,000 is the difference in it. Now we have some assets also. We write here 10% match fund investment. 5 lakh and 15,000 is accrued interest. So here we write accrued interest on match fund investment. 15,000. This way we will show these items into the balance sheet. I hope I am clear to you all regarding this fund based accounting. Suppose only match expenses are given in the question. Nothing is given regarding match fund. Only expenses are given, match expenses. Then that is simply an item of income and expenditure account. Likewise, price is awarded given. Price is awarded will go to the income and expenditure account. So if any fund is created to meet various expenses of that activity and a fund is created for that activity, all those expenses will be met out of the fund. Okay, I'll be sending you some questions relating to it and you have to solve that.